everything is consumed by AI right now. I spend every waking second working in AI and thinking about how it's going to transform my organization and the companies that we serve. And I live for these moments. I'm a futurist. I find change to be just so invigorating and life-giving. So when things are status quo, I tend to withdraw. But when these moments of change happen, I get really engaged. So this is as fun as I've had in work in a really, really long time.
Hey, everybody. This is very exciting for me. Excited to have Taylor Holiday here from Common Thread Collective. My name is Aaron Schwartz. For those who don't know me, I'm one of the founders of Orita. We build AI customer segments for a bunch of brands. We are not talking about that side. We get to partner with Taylor's team on that front. Hey, Jeanette, you guys are like awesome. We love you. And we're going to be talking about profit engineering and CTC and the future of commerce and probably AI. So Taylor, let me get out of the way. If you can just do an intro to yourself. It doesn't need to be too quick, but like how you got here, and then we'll dive right in.
Yeah, no problem. And Aaron, I just want to say, I just got done listening to your SaaS Operators pod. So that's one of my favorite current podcasts in the world, because I've said many times, I feel like those guys are in the midst of like total industry chaos, and so they're figuring it out. So the conversation feels very like authentic and generally curious, versus a lot of podcasts feel like they're talking at you. So I loved it. It was a good episode. So I'm excited to jam with you on that.
The biggest problem with that is you saw that I have a co-founder who's like infinitely smarter than me, and you're like, why'd I get the beat?
I wasn't going to bring it up. But thanks, man. I'm excited to be here. So I'm Taylor. I'm the founder and CEO of Common Thread Collective. We're an e-commerce growth agency that helps brands produce predictable, profitable growth. We've been at this for about 14 years now. So that makes me old and unk in this industry for sure, but has also, I think, led to a lot of experiences and improvements in who we are and how we do it through failure. And so we get the honor and privilege of serving a lot of what we would call the early to mid-market consumer e-com brands in helping them on their journey towards hopefully more profitable growth. And so that puts us in the middle of lots of cool conversations around AI and performance marketing and retention, and working with awesome partners like you all.
All right. So somebody comes in, I introduce you to a friend's brand. They're 10 million, like it's a real brand. They got at least some stuff dialed in. What is like the first conversation of the first 3 hours audit look like when you're talking about like predictable, profitable growth? Like, what are you guys inspecting?
Yeah. So our service begins in what we call a profit system implementation. We think that great growth marketing is a trellis on top of a great organizational financial plan. So uniquely as a marketing agency, we actually begin with financial planning. So we do FP&A for all of our customers. So we think that the best organizations that we see have this like really intimate connection between marketing and finance, where the actual financial goals of the organization are deeply integrated into the marketing calendar in particular. And then that flows into all of the budget decisions about media, channel allocation, creative strategy, and they all ladder up to visibility against that organizational goal. And so our work early on is usually helping to establish that plan. It's to bring together qualitative and quantitative information from both sides of the org to build a daily expectation of over 35 different metrics that integrate deeply into what we call the units of growth. So every email send, every ad you're going to launch is planned and accounted for into the future. So as we begin to execute, we can answer exactly where we're at relative to expectation at all times.
That is awesome. And I imagine the devil's in the details. When you're meeting with the brand, then is it the type of thing where you're, hey, CEO's in the room, CFO, CMO, director of e-commerce, buyer? It is like this is a full company that's working with you guys?
Well, so depends on the size, right? In terms of the organizational structure that you're going to encounter. At 10 million, it's usually the founder. There's usually somebody who's in charge of marketing generally and somebody who's in charge of finance generally. At what level they are from a title standpoint differs. But our preference is to have those people together in the room. And it's because we find that many of the times they're siloed from one another. And so you end up with plans that are disassociated from actions, and also plans and expectations that are disassociated from reality. And our best thing that we can do is to start by helping to tell them what we think is likely to occur. That is our first job. Then we listen to what they would like to occur. And then our job is to bridge the gap. And that's kind of what we're after, is to sort of look at their data, tell them what is presently likely to happen, and then hear from them what their goals are, and then say, okay, what are the strategic initiatives we're going to execute together to help resolve any gap that may exist between those things.
When you say look at their data, I'm assuming it's like across the board. It's like, yes, your margins and what your like logistics, like it's truly going down to contribution margin, but it's also the like what channels are working today. And
Yeah, so we're going to absorb the first part is building the database infrastructure that underlies the system, right? So that is every marketing part, every part of the marketing stack. So we'll think about that as Facebook, Google, Meta, TikTok, Snapchat, GA4, Klaviyo, everything that would exist on the marketing side. Then the order level data out of whatever their CDP or Shopify or Magento or Salesforce or whatever instance they're on top of. And then the finance data is the third sort of pillar of that. So bringing in all the cost structures of the organization. We absorb a full P&L from the organization to be able to put together a 12-month forecast again at a P&L level. And then we're operating daily against a contribution margin measure for the organization.
If you're operating daily like that, how often do you find yourself helping the brand understand, like, look, there might be some short-term painful decisions that are long-term optimal? Like, how do you have that discussion? Or is that like, look, we'll talk about that in 6 months once we kind of get the machine running?
I think there's constant trade-offs in that. That conversation is at the center of our work all the time. Is that brands are constantly making choices about volume and efficiency at different times for different reasons. And I think this is where most of the complexity lies, is that our desired outcome and then what is true in reality often require, like I said, some trade-offs in what you're trying to accomplish. And in particular, I'll give you an example of where I experience this a lot, is that because brands usually come to us when they're amidst challenge. When things are going awesome, you don't generally switch providers, right? So you come to us because there's something you're dissatisfied with. And that may be coming off of a long period of declining new customer acquisition efficiency or something like that. And oftentimes restarting that growth engine is an investment. It doesn't happen overnight. It's a process by which we're going to have to scale back up investment into this growth to pay back off on a longer time horizon. And so some of that is an analysis of like, okay, where are we going to be able to fund that investment through alternative cuts or other opportunities? And those kinds of dialogues are just every day about where are we trying to go as a business. And this is why, like, I have a lot of content where I talk about the fundamental root input that every business needs is clarity from the shareholders about the objective of the organization. And it is shocking to me how ambiguous that often is when we interact with people in terms of, why does this company exist? How do shareholders plan to realize liquidity? What is the long-term vision for how this organization wants to operate? And then in light of that, how can I, as your growth partner, help you to achieve that? So there's a lot of like humanity in the midst of the data that has to be worked through.
When you're building out a plan for a customer at this point, is it, hey, we're thinking about a year, or is it you're actually trying to get them to think about a 3 or 5 year plan and then like kind of work backwards?
I want to know.
It always depends.
I always want to start with the end in mind. And so for me, I want to understand the vision of the founders. And so much of this is like, if your desire as a business owner, and so much of this is like, I just try to put my CEO hat on that I've lived in for 14 years and go like, what do I think about all the time? And the question often is like, okay, well, how are we going to make money? Is the vision to sell this in some time period? Am I trying to take cash distributions this year? Just those two are a huge distinction in whether the balance sheet or the P&L is the primary measure of success, right? And so each of those reflect a very different growth strategy from me to help you accomplish. And so especially in e-com, where it's so inventory heavy and so much cash gets tied up in that part of the business, that if you have ambitions around cash realization for yourself and you want to be able to pay yourself more money, the mechanism for that is going to involve very different actions than just trying to manage and grow the P&L.
I have so many questions on that. I'm just going to keep
No problem.
We're going like, we'll see where this goes. So thank you. I started my career in consulting,
Great.
right? And so I think a lot about like, hey, current state, future state, here's a gap analysis.
Yep.
How much, when you're doing that gap analysis, or, you can come up with a much more fun term than I would, is you guys bring in, look, we have expertise from having done this for whatever the number is, hundreds of brands, right? And like you having just been in this ecosystem forever.
Yep.
And how much is like, you're looking at their data and you're just like, hey, look, guys, there is low hanging fruit here. Or they say, hey, we want to experiment with this, right? Because you're trying to get me somewhere in 12 months.
Yep.
And it's like, this is where you are.
Yeah.
But how much are you actually bringing in experimentation and like, exploration as well for brands?
Yeah. So I'll give you a very practical way in which both of those things come to life at the same time. So I think our institutional knowledge deployed on behalf of our customers is one of the primary value propositions of an agency. So I'll give you a practical example. We provide incrementality testing for our customers, which is a measurement system by which we run geo holdout experiments to isolate the causal impact of their media in different channels. Okay. So a brand comes to us, right? And they are sort of devoid of having any individual data about their individual incrementality of their channels. But what we have is hundreds of tests from other brands that allow us to begin with a benchmark for operating their system that is better than their present starting point, while we then run individual tests to ladder into and improve the specificity of that system for them. So that's an example where the institutional experience allows for immediate impact and improvement to the system, while also then layering in the uniqueness of every individual business, because every business is unique and novel. But there are commonalities and frameworks and principles that we can apply against businesses to help them think about and improve the service function right from the start.
How do you build your team? Because like the depth of knowledge that you obviously have, understanding the finance side, having been on the brand side, like you're there, but you're bringing people in and they're working directly with the brands. And so everybody's got the system from CTC, but they're a step away from you. What is your team makeup? How do you educate your team and get them to understand like the actual kind of finance plus marketing?
Yeah. Operationalizing ideology is my life's work. What I have learned for 14 years running an agency is that if I'm going to make this promise that I'm going to deploy 14 years of experience on your behalf, I cannot do that through an employee that started 6 months ago and personally possesses none of that institutional knowledge. It's not real. And oftentimes this is the trope that agencies get applied with, is this idea that like, oh, you get sold by the senior people, then the junior people show up, they have none of the experience, blah, 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 blah. Okay. Well, so that is true if that person is making decisions on the basis of their own individual knowledge, right? Then yes, you're running into severe limitations. So all the time I think about how we raise the floor of the work through systems, operations, AI process, right? So everything that we do, there is to borrow a Palantir term, like there's an ontology that surrounds the decision making. And our ability to take that ideology and turn it into code nowadays, where like literally we're talking about Claude skills that now are able to be deployed into meta ad accounts, into other elements. Today, it's more possible than ever before. It's been a challenge for 12 years because to actually operationalize this through spreadsheets or Asana processes is much more difficult than it is now through AI, where we can actually defer a lot of that decision making into a system, and it's company as code more than it is company as people. And I think that transformation is really powerful because it allows for more integrity between your ideas and your behavior, which I think is really the promise that you want, is that whatever we sold you on we were going to do, you get high levels of integrity that connect back to that ideology. And that's really our job.
Interesting. I was going to dive into the like how AI has changed your business, but you kind of went down that path. So part of it is you have the vision, you can now realize that vision more quickly, or time to value shrinks for a brand because
and I would say more consistently. That's the biggest problem, is that like when I have 200 ad accounts, the truth is that if you opened up all 200 and you tried to apply our methodology as a filter against it, like we would not grade out that effectively because there's too much human bias that gets introduced into it. The reality is clients pressure us all the time. Humans make bad decisions. They don't follow things. They insert their own opinion constantly in this area of execution. And so it's really hard to actually obligate people into a set of behaviors independent of all the external pressures that change it.
One of the things that we struggle with, and you heard DB on the podcast, is like my two other co-founders are ML engineers. And if nothing else, we're good at data science and machine learning. And so we will give you the right way to test and prove incrementality. And I'd say 10% of the brands that we work with want to hear that. They want to see Klaviyo number go up, or GA4 go up, or some number go up. And so I actually had a discussion with a brand at Shop Talk, so 2 days ago. I'm just like looking at the calendar. And my question for them was explicitly, if we could make your Klaviyo number go up, or we can make your Klaviyo number go down, but top line revenue go up by like changing attribution, whatever. What do you prefer? And there was a meaningful hesitation. The reason I'm asking, by the way, separately had a discussion with a very, very big ads platform, which we all know, and they have the exact same thing, which is like, sometimes we just make number go up because like, that's what the person wants. How do you find that balance? And also candidly, to your point, how do you educate your team to find that balance of like, you got to educate the brand, and you're like, your passion is obviously serving brands and helping them grow profitably. How do you help kind of overcome reticence or bad strategy?
Man, this is the core challenge of the work that we do, is related to the desires of the person on the other side relative to what we believe is best. And all the time we're in this journey. And it's funny, like Meta, I don't know that's who you were referring to, but as an example, they just started letting people optimize for like recently, like external third-party data measures like Google Analytics last click, or I know they don't believe that is an effective way to operate, but they receive so much pressure about the measurement. And so they're fine, we'll make your number look better. right? And sometimes that is the best way to maintain the continuity of the relationship with the customer because they're demanding that of you. But what I find is that our job is to not, if we're in that seat where we've been granted an external measure and now they're asking us to execute tasks against their definition of success, we've already lost in some way. And that we won't be long for that world because functionally at that point, we've become a commodity. We're an execution engine against their ideology versus we're trying to become the opposite. And so those relationships tend to fizzle out pretty quickly because there's probably cheaper options to get people to do things you want them to do.
If you've already figured out what the objective is and it can be
That's
gamed.
Right. And so if we're not in the seat of defining the measure of success and then therefore the system that should execute against it, we're probably going to struggle in the relationship long term. But there is like really powerful financial incentives. If somebody's like, we're paying you a large retainer and we just want you to do this, it is very difficult to not just go, okay, if this will make you happy, we'll just do it. And we fall trapped to that all the time, but it's the worst version of us when we are.
I think one of the things I see about you is you forever, like since I heard your name, you've pumped out, like, I don't mean pump out in a bad way, like you create incredible content, like, it's like listicles now, like really, really research thoughtful content. And to me, my assumption is that makes it easier for a brand to opt in or opt out, which is like, hey, look, we're not just going to bully these guys and tell them what to do. They're actually going to there might be conflict because you're bringing a strong opinion based on like research and hundreds of brands and all that. Is that like, does that help people?
So I think this is just like culture. You're exactly right. So I think about this like with internal culture as well, which is that if like it is very obvious who you are, people can opt in or out of that idea. And so the idea that someone would come to us today and be like, we want to use Google last click as a measurement system, that would be very weird. Because we have published so much information about how much we care about different measures that for them to show up, it would signal to me they have no idea who we really are. And they just think of us as just another agency provider. Maybe they were referred by a friend or whatever. But it's very rare, in part because so much of our lead generation is inbound off content marketing. So in that way, you're pre-qualifying a shared sense of the world, right? It's like if you're let's pick a metaphor. If you're a Catholic church, and everybody knows you're a Catholic church, it would be very weird for someone to show up and want to, be executing like a Jewish tradition inside of the building, right?
My kid's done it. Was at your church? Yeah. That's right.
Like it would be like, wait, why are you here? Like, and in some ways, that's how I think about this. And now it's funny because there's this tension all the time that I get feedback that like you should be just a little less confrontational or a little less dogmatic with your ideas. And I actually think that some of what I'm trying to do all the time is just like make it clear the subset of the world that we're going to be effective in who we're here to serve. And I actually am okay that a bunch of people opt out of me. Like I'm okay with that.
Yeah.
And so I think it is a balance where that content on the front end, just like an internal culture, if you're clear about who you are, then you can have employees that opt in. And if you're clear about who you are, then you can have customers that opt in, and it sort of reduces some of that friction. It still exists, but some of it.
I think it's very clear at the top end. And like you'd actually said this right before we started, so I wrote it out, right? It's like you're interested in the overlap of marketing and finance and producing enterprise value, right? I think I got that right. So that is clear and as far as I can tell from the outside, has always been clear, right? I've never been a customer, but I've obviously consumed your content. The question I have for you is like, how have like the methodologies changed? And like, obviously AI is different, yada, yada, but maybe are there some things that you held like really, really firm before about the right way to do that you've actually changed over time? Or they're like new things that you're like, I'm actually pretty sure going forward, the right way to drive profitable growth or to like blend this is just like, there's actually shifts happening and you're kind of exploring those right now?
I think the most obvious version is that the availability of capital in e-commerce changes the market's expectation of how value is created. In the 19 to 22 era, there was an abundance of free capital. Yes,
it was awesome.
It was a beautiful time. What that does is it pushes everyone's appetite for the yield curve to be pushed way, 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 way out and gives value to top line revenue growth. And the idea of trying to be profitable in that moment was actually counter to what the market wanted from people. It's really easy to look back on that era and be like, man, Allbirds, what a bunch of idiots. Like they ran a terrible business. They won the game as was defined in that market at that moment. And they actually are richer than most of us. So, hats off to them. We can sit here today and criticize it in the light of the market now, but the reality was at that moment, the game was very different. As soon as all that capital dried up, what it means is that you have to self-fund growth, or you're having to use like strict expensive debt, which means that the efficiency of everything changes and the growth cycles of everything change. It fundamentally alters the playbook like 180 degrees. And so that is like we were early to see that because our business model prior to 2022 was all a percentage of media. And so that is like for 10 years, that was a really great business model because all spend did was go up. And then like that overnight, as the capital dried up, it all disappeared. And so we went through a really hard reset as an organization, but we were on the front end of this curve because everybody started cutting back media spend. Our business shrunk a ton and we had to reimagine ourselves very quickly. And then so for the last 3 years, we repositioned around this idea of profitable growth. This became a novel concept, isn't it? As crazy as that is, that was not the meta of the previous era. Like that was not the theme that people cared about. But because we were early to on it, we were sort of able to plant our flag and build identity around it. And it changed how we did everything from contract structure to workflow to team. Everything changed in light of that reality.
It's interesting. I haven't been at Loop obviously in a couple of years, so still super close to the team, but we
Yep.
went through the same thing, which was like, okay, this is no longer about growth. It's about profitable growth. And like, let's do this right. And they were very, very quick to turn it, which is super helpful. I think at the end of the day, it's like a lot of companies will talk about it from marketing, like you actually live it.
Yeah,
So it's very
totally.
different, right? It's like actually changing. I do have a question about business model though. Because you mentioned Palantir and like my wife just joined Sierra, which is outcome-based pricing for everything. We right now look like a retention shop. We're building our ads product. We're doing direct mail. I deeply want to be an outcome based, but no brand actually wants to do a rev share on email for incremental yet. Like it's just way too complex. And it's like, no. Just give us a flat fee. Let's go. How do you guys think about that? Especially given that you're like seeing so much of the business. So you actually do, if not control a lot, you can apply pressure to a lot of different parts of the business.
It's such a good question. And I think the world is moving very much to a consumption and outcome-based model where this idea, it used to be that like, again, the business model for our industry was all predicated on this idea of like, you manage media, you take a percentage of the media that you manage. But the problem with that sort of as an underlying idea is it's a percentage of cost. It doesn't actually equate to value in any way, shape or form. It harkens back to the like 60s of like direct buy TVs where there was like, oh, it's like kind of unclear exactly when the value is going to be captured. So we can't really bill on that. And so it lasted for so long. It's crazy how long, and it still persists, especially in larger enterprises. And then we went to this like very fixed fee cost plus model, which is to give, and the value of that was to give brand owners like clarity of future cost in a way that they could actually arb the value creation in the future, where as we created more value against that fixed cost, the benefit and value was passed on to them more than us taking the capture of that. But now I think that we're moving, and I would say now 40% of our deals include a variable performance component related to the achievement of contribution margin in a given period of time. So if our promise is predictable, profitable growth, then we feel like that we should be on the hook for delivering against that expectation. So we define an expectation in a period of time. In the event that we achieve that, then we receive some compensation commensurate with it. And so I think that's an evolution. Now, I think there's actually further to go. I was in a go-to-market meeting today about, okay, how does the access to our MCP and the consumption of data relative to the work overlap with the service quality? How do we price in light of a business model that the labor gets very different in terms of what's on my side? So I think that this is a highly evolving topic where more and more the idea that someone is paying for a result makes sense in people's minds. I find that brand owners are very reticent of this idea, though, because they've been exploited by their lack of understanding and attribution so many times, candidly. Is that there have been a lot of well-intentioned ideas that end up in 28-day click, 28-day view attribution windows where people are assigning them value credit of stuff that's not incremental at all. So I do think that as incrementality adoption becomes more and more a topic in email, I think it's actually lagging media. And I think you guys are a big part of that. I think it will become people's confidence in paying in those models will increase. And the courageous service providers and SaaS providers are able to assign and obligate themselves to that kind of value creation will win disproportionate rewards for it, I think.
That you walk in your brand today and you see their tech stack, what are the things that they're doing that give you confidence that they're even prepared to have these discussions? Is it like they use some certain like dashboarding tools, or they're I don't even want
all of it relates to the organization of the cost side of the business. e-commerce has a massive underlying data rails problem that was the SaaS products of our industry follow the market demand. So if we go back across this spectrum, all the tooling for the last era was about revenue generation and growth. Like it was enablement for what the market wanted the businesses to accomplish. Well, now in this era, what you've seen as like the big SaaS providers that started to come up, in the first phase, it was the marketing measurement folks. It was the Northbeams and the Triple Whales. They were like the first ones like, oh shit, we got to figure this piece of it out. Now what it is, it's Fulfill and Good Day Software and Final Loop and it's the finance ERP layer of the system, because that's actually the entire thing. The whole game actually sits in the operations and finance in an e-commerce business and inventory management in particular. And businesses' ability to understand something like their present cost of goods on any given day is horrific. It's horrific what a mess it is. And so there is so much work to be done around the organization of that part of the data stack inside of e-commerce, whereas marketing is like way out here. This piece of it is spreadsheets and fragmented POs and text messages with manufacturers and all sorts of chaos. And now you layer in tariffs on top of that. And now it's accounting problems and lack of, like, there's so much ambiguity that businesses have a lot of trouble making good decisions because it's hard to understand where they actually presently stand.
I'm a small investor.
Yeah, Kyle's the man.
That whole space
he gets it, like, because he lived it, right?
Yeah. I mean, it's not like it's the Tubby's founders or some, to whatever, but like, they actually know how to build a business.
They know where all their problems lie. Like, when you run an e-commerce brand, you realize that like 95% of your mental energy is around cash management and inventory. Like, and that's like so much of where your concern is, because that's how you die. Like, you die in light of making the wrong PO for the wrong amount of units that sit in a warehouse forever.
I want to get down to some tactics for like, let's abstract away a little bit from CTC, but like you come in and you audit a brand, bring you 100 brands. What are the like 3 low-hanging fruits, or what are some of the things that like people should start, whether it's like a tactic or a tool, or just like a mentality shift or an analysis or metric they should be looking at that like really stand out to you, kind of independent?
In almost every case, they've capitulated to the idea that they have to accept non-profitable media spend as part of the growth lever. Is that there's a boundary that has been violated at some point because growth got hard, and so they lowered the expectation, and now it is acceptable that they are spending money at a loss. And that has just become institutional. It's just what is true. And the lack of constraint around that idea removes the obligation to creativity on the marketing front. And so that's like the thing I see most often, is that we are spending money out beyond the marginal frontier. We are now losing money. We are chasing some goal that we've got to get to. There's pressure, but I don't know what to do. And so the easiest next action to take is either I discount to create a promotion, or I just lower the efficiency expectation of the media and go forward from there. And there's this like tension in that all the time. Around how the media dollars are being spent, and there's lots of waste. That's like step one, inefficient media still to this day.
Can I double click on that before we go on to the next one? Are there any businesses where that actually makes sense, or like a life cycle in a business is like when you're just getting going, or is it, hey, your subscription product, or you've actually, is it all about first order profitability or confidence?
It's about the organizational hurdle rate for return on invested capital in some time period. So like if I think about this as a capital allocator, if you're a subscription business and you have an LTV that increases 300% in a year from first order, then taking a loss or a 6-month payback period still might result in a 70% return on invested capital in a year. Like, and that's like an incredibly good use of money. But what I see is that there are brands that this idea that there should be a hurdle rate for the investment of dollars into media is just not an organizational idea that exists in many places. Because most brand owners, my experience of like, especially e-commerce, like they're not finance people generally. They have never really managed treasury in any aspect. Like the idea that I should have some expectation of the deployment of my dollars against some future return is not the way they've ever behaved. They're behaving in survival. They're behaving in, I just have to get the money now. And so what do is I've got this machine and I just keep sticking dollars into it, and I take whatever the machine gives me. There's no idea that I would stop giving the machine money and maybe explore doing something else with the dollars entirely that might yield a better return. And so there's this lack of like, what is the management of the capital inside of this organization against some expectation of return and some horizon? But businesses get there. They start going like, well, what if we opened our own store? What would be the return on that in a year? How does that compare to putting it in Meta? What if I paid a big influencer? What if I did this campaign? What if I launched this new product? And what you see pretty quickly is that the math actually very quickly becomes better on some of those initiatives than the next dollar in Meta. And so money should move out of that system and start to go, well, what if we launch this new product line? Well, that might cost us $80,000, but the upside's 20 million and it's got a 30% likelihood of success. Well, the EV on that bet is way better than the next dollar of Meta. We should go deploy the money there. And I think that's like the evolutionary progression around being a survival media company, just trying to get it into to like, okay, I've had a little success. Now what do I do with the next dollar that I've got? Yeah.
Got it. Thank you.
No.
Keep going. I interrupted, but what are some other things that like you're auditing the 100 brands? What are some
the
other
next
things
thing is that there is a set of pattern of behaviors around, let's use retention and creative, that are like workflows disassociated from value. So what do I mean by that? We send emails every Friday. Why do you send emails every Friday? Because that's what we do. That's the workflow we've developed. We have a designer, there's an approval, and it goes out every Friday. Well, is that enough? Are you hitting your revenue goals? Well, we don't have a channel level revenue goal. We don't have an expectation of those emails. We have an expectation of an out. It's like a set of tasks that have to get completed. What about creative? Yeah, we launch 10 ads every Monday. Why 10? Why Monday? It's like, well, these workflows have just sort of been developed based on available resourcing more than anything else. Versus like, no, there's an expectation of the financial goal for this channel and the efficacy of it. And so therefore the output is just whatever it takes to get to that result. And so that's like a transitional shift we're using, is that like, no, there's no set number of emails every month. There's a goal, and then there's a desired action plan. And then the second we're off course, we change and fix it to get to the goal. And so that sort of is another organizational shift from like, we just do these things to know we create these results, and we do whatever it takes to create these results. And that's like, I think the second shift that often from the workflow standpoint becomes a big transition for us.
Just to talk shop for a minute about the Orita side, the thing that is fascinating is we'll talk to like exceptional marketers who are like, well, we have a very sophisticated strategy. And I'm like, cool. When was the last time you inspected that and like tried to find some marginal impact somewhere else? And so the conceit, and again, you picked this up probably from here at DB, is like, we've built a global model that has seen way more strategies than you could ever conceptualize. We have the brand who sends one a week, and we have the brand who sends 21 a week and has had deliverability issues and has this type of buying cycle and that type of buying cycle. And so the idea and like what you're able to do is actually go get all the strategies and then optimize based on everything about you. That is one piece. The second is we literally launched a scenario planner a month ago, and it's in beta and it's fine. And like, dude, it is the equivalent of an Excel sheet, which is like, you have segments. Our segments are very, very stable. Send 12 emails a month to this segment, 6 here, and you can start predicting and literally just visualizing okay, cool. What is our objective? Our objective is 20% growth. Can we do it with our existing list? If not, to your point, find an intervention. Hey guys, go turn on Alia to go increase your list size, right? Or go explore SMS or ads or something else. But like, we find that even with like the biggest and faster growing brands that we've seen in the Klaviyo ecosystem, they're still like getting pulled, and it's like a scramble to go figure it out, or they're like sticking with something that worked before and not actually experimenting. So anyway,
I
just
totally
like
agree.
plus 1,000. I want you just share.
Retention in particular is that the attribution question hasn't really woven its way through that system in the same way that it has for the performance dollars yet. So as an example, we get people and they come to us mostly with Klaviyo's default attribution view, which I think is like 7-day open, 1-day click, 1-day view, whatever it is. Like it's like, I think 711 I think is the default. And so there's an organizational revenue number associated with email that is just nonsense, candidly. Is just nonsense. It inflates value, in particular in the flows at the like abandoned cart stage and different things, because these are like unopened emails or emails that are open but are never interacted with. And so the incremental value of that number is much lower. I think you brought this up sort of earlier. And so one of the first things we try and do is, absent any incrementality tests, we try to normalize the expectation of attribution to other channels. So in other words, we'll move it to like a click-based only measurement of the channel as a first step before we get to an incremental test. What that does is it lowers the email revenue number dramatically. Now, it is almost never a good thing as an agency to have lowered a revenue number, okay? And so this is a fight all the time where suddenly the numbers we're reporting feel worse. They feel worse. And so it's like, man, this takes a lot of educational effort to work through. And there's such a temptation to just go back to the old view and just be like, just give them the bigger number, you know? but we really want to work through, because what I actually care about as the person responsible for the financial result for the month is I want emails that actually generate incremental dollars. So I need the closest approximation to that reality that I can get before I run an actual test. And so the 7111 number doesn't help me. It doesn't actually help me action the goal. And so this is a huge problem.
So a lot of the product that we're building right now is actually to help the CRM manager who knows this intuitively,
That's right.
but who is gold on make number go up. And so we think a lot of our job is to help her advocate with whoever it is, her CMO, CEO, CFO, whatever. How do you help turn that? Because like a lot of people who, will make sure that people see like all the insights that you're sharing, but like, how do you help them advocate that actually we do need to quote unquote take a step back because we've been doing it wrong before. The real impact is here. The real metrics are here. Is it just more design. Education?
This is where you tell the CFO and the CEO that it is your fault that your email person has behaved this way because you gave them the wrong KPI. So the first step is new KPI for this person, returning customer revenue for the month. This is an example. Now I don't care about what Klaviyo says. It's inconsequential to me. It is not a thing we're going to look at. It's not a thing we're going to ask ourselves. If the email marketing manager wants to use it as a proxy for themselves in their own discipline, fine. But they are going to get bonused, compensated, paid, promoted on the basis of the revenue number that's going to show up in our bank account. And so everything is incentive design inside of these organizations, where what has happened is and it's funny, it's all an incrementality question. Everyone's afraid of, if we just have like one number, then there's going to be people taking credit for it who didn't really affect it. And so it's like they just try and give them very specific channel level metrics, and you end up with this huge proxy layer of incentives that don't actually correlate to the outcome at the organizational level, and it's utter chaos. Incentive design is like right below, like the founders don't know what they actually want. Number two is, in light of that ambiguity, they've created incentive misalignment everywhere. And so that's like a very common thing that I see on the retention side in particular.
One of the things that we run into is if I can make you $1, you'll pay me 99 cents on the performance side. Like, let's go, right? Contribution margin, whatever, but if it's profitable. And if I could give you $10 million today, but you have your fixed SaaS budget, you won't pay me $1,000 a month because it's like in the retention budget. How do you break through that? Is it the same thing? It's like, hey guys, like the goal is profitable growth, and you should be like hammering the right channel at the right time in order to do it. And again, not like how does CTC go, but how do you help the brand
I think
figure out that
starting
story?
point, and this is where my Sean thesis sort of started to merge, is that I actually think it's a lot easier for me than it is for you, because I attack the labor cost side of their business and not the software side. I think there's an anchoring to the price of software. Rishab stole my line. He didn't give me credit for it in the pod, but I think it's because of Shopify has anchored the price expectation of software at such a level that, like,
Rishab and I have talked about this for a year. He's like, you're an idiot. Stop doing it this way. I'm like, dude, I love this. I need this ecosystem.
So
this is my lifeblood. Like, we're going to figure it out.
Shopify actually does this on purpose, which is they want to commoditize all the app layer of the business and accrue all the value to themselves in many ways. The sort of ultimate like nice guy positioning arm of the rebels that has like monopolized this industry and flowed all the money to themselves. But that's a separate topic. The reality is that I think people's price expectation and anchoring around software is just really low. For me, labor is expensive to them. They pay hundreds of thousands of dollars in labor. And so it's easier for me. They still don't want to pay me purely a percentage of the contribution margin. They would still resist that, especially if it worked, candidly. The more it would work and the more that they pay me, the more that they would try and undercut and replace me. But because I start from like 10% of the P&L and you start from 1 to 2% of the P&L, I just get a little bit more saving opportunity value in their mind relative to that out.
Yeah. The first time that ever fully struck me was actually at Loop, where we had a brand that everybody knows I was paying, I don't know, $50K a year or something. And they must have been paying FedEx for return shipping $1 million. And I was like, guys, we're just talking about the wrong budget right now. Like, that's it. They have the money. And it's just, we're structurally in the wrong spot.
We all
like,
can
it is what it is.
There are brands that yesterday wasted $30,000 on Meta at no return. And it's just like organizationally okay. But if you brought a $99 software upgrade, they would be like scrutinize it in immense detail. And it's just the reality of what is the psychology. And this is really psychology. It's why Meta is so powerful. Is they've moved the Overton window about what's acceptable behavior inside of a media organization. It is acceptable to spend a ton of money testing ideas and losing thousands and thousands of dollars in the process. They've just made that a norm. And I think this is like just one of those things that as leaders, we have to really scrutinize why some of these things are acceptable and why some of them aren't. But it's hard because it's just so deeply woven into the culture of our industry.
When we started this conversation, you said SMB and mid-market.
Yep.
I actually didn't ask your definition. Like, where do you guys cap out, and why don't you just keep moving more up market where you have in spirit, like a team that should have the capacity to like wrestle with this, has more breathing room to be more long-term and strategic? Like,
So
where's
I
CTC
think
no longer
that we
the right
have made
fit,
a
do you think?
very intentional choice to move down market. That I actually believe all of the opportunity, if you're going to serve this ecosystem, 99% of the volume of our industry is sub $5 million. Like all of it. All of the customers are below $5 million. And I actually don't believe that there's such thing as an e-commerce enterprise. I don't believe it exists. I think it's like 4 brands and 90 people are fighting over them. And they have so much leverage that they go like, I'll tweet for you. And then they get free software. Like, and that's the e-commerce enterprise that everybody thinks they want. And what I've watched my competitors do is like the Power Digital, W Pro Institutes, as they went to enterprise, what they did is they actually ended up switching industries because they end up realizing that like there isn't an e-commerce enterprise. There is retail. That's a big, retail's a big thing, and B2B is a big thing, and like software is a big thing, but there's not a lot of big consumer brands. There's like 8 public companies in the whole space that are purely D2C, you know? So, and I think that all my leverage against my competitive set is that if I can deliver the highest quality service for the cheapest price possible, then I can access that market and I can create the best relationship between cost and value to my customer. And my business is all like LTV to CAC. And so a lot of people think about that the answer to that formula is like large enterprise contracts, but I actually think that's wildly incorrect because the CAC is like 1,000x. You're talking about RFPs, you're talking about in-person visits, you're talking about long-term audits. I close 3 $5 million brands a day. It is, the CAC is functionally zero. In fact, many cases it's negative for us. So the LTV calculation just works so much better. And so there's so much that we create in AI and operating leverage, and the competitive set of agencies in that space is like, candidly, a bunch of 3-man shops that are just starting out on the journey. That's like tends to be, that's right. So we've actually been very intentional that CTC's value in the world is to constantly figure out how we can do more for less to our customers, for our customers.
Are there companies outside of e-commerce or like agencies that you look at? Like, is this like, I really appreciate like Costco business model versus Walmart? Like, are there
I'm very Amazonian in my thinking that I think all the time that your job is to deliver excess value to the customer. And the more that I can, like, I think a lot of times we think about the relationship with price, and I've heard the founder of Judge Me talk about this a lot. I think he gets this really right too, which is that like all the time, if there's value created, there's this question of who gets to realize it, me or you. And the more that answer is you and not me, the more that customer wants to stay with you. And so my job is to figure out where the me portion of it to improve my operating efficiency against that so that my margins can continue to expand and grow and I can deliver more volume. But you, the customer, are so satisfied and receiving so much value that you couldn't possibly think about replacing me. And that's like, I think about this. Amazon Prime is, I think, the single greatest product I've ever encountered in my life. Like, it is unbelievable what I can do to order a product and have it in my house seconds later at the best possible price. There is so much excess value capture for me as a human in that arena relative to my other options. And I think about that other service all the time. How could it be that for this price, you can get that? Like, and that is really what I want customers to experience. And I think that we accomplish, I call it like the holy trinity of what I'm after is like lower ACVs at higher gross margin with higher average employee salary. Like, if I can actually accomplish all those things, I have continuity of staff, which is really important to my work. I have better value to my customers, and I have a better operating business myself. And so for the last 3 years, we've been able to do it.
You also just have you have a talent magnet too, right? It's like if you can pay premium to get the best, even if like the price per unit. It's really interesting. One of the things that has shifted in our business is, as of a couple of weeks ago, DB and I have been doing daily CS stand-ups, and I forgot how much I ran a brand for a decade. That's why I've been in the space, but I've been on the commerce tech side for almost as long at this point. And I'm so much happier just working with customers and be like, cool, like, yep, this is good. How do we make it great? Or this is bad. How do we make it right? And just like finding those points of leverage and then figuring out, cool, how can we take this lesson learned and bring it to the next one and the next one and the next one in a scalable way? It's, when you're starting a SaaS company, you got to grow. And now I'm at the point of like, cool, we're growing, we're doing a good job. How do we go literally create more value, not to go charge more, but to like make it undeniable that you're going to stay with us?
Is the closer that I am to the shareholder, the the more my product evolves to create real value. Whereas the more I serve a middle manager, the more I start designing my product to generate product or proxy incentives. And so there's a thing I love about being close to like the real value of a company, because it sharpens my thing towards that end. Whereas one of the things I experience in the enterprise is I watch my product evolve to like information generation. Like, so when you serve the enterprise, a lot of what ends up happening in a service side business is like you're helping the middle manager create the deck to give to their boss, to give to their boss, to give to their boss. And we'll end up designing whole workflows around information production. And I go like, wait a second, like we just did so much and they paid us a lot for it. But I actually think that's like was really bad investment from their company. Like they actually wasted a lot of money having us create information that they could pass around that nobody read. Like, and I get leery anytime I find myself in that space, despite someone paying me a lot of money for it. Like there's something about me as a bootstrap founder that just has like a resistance to that kind of value creation. And I'm always afraid of our product becoming like not sharp in that way, dull in that way. And so there's something about the SMB world that I think I saw Travis Kalanick talking about this on the interview, where he's like, if you're going to sell into the SMB market, like that's like the ultimate game. It's the ultimate sharpening of the sword in the B2B world, because it's like they don't suffer fools. They have no money. It has to be valuable. And so there's something about that arena that I think I'm just maybe a glutton for the punishment of.
That's cool. I love it. So we got to wrap up in a couple minutes. So there were kind of two last things. The one I wanted to ask was just like, what are some metrics that people like that you just despise? Again, I want to kind of pull this out of like, where are the mistakes that people are making? And then the last thing is I'd love for you to just spend a minute talking about your podcast, if there's anything else about CTC, but let people know where to find you. So first of all, like talk to me about metrics. What's really, really good that people are undervaluing?
Yeah, that's
what
a good
is
question.
garbage
I
that
try
people
to,
love?
I have a deep appreciation for like all data in so much that it tells you what you want to know and helps you get where you're trying to go. So what I hate is misalignment between objective and measurement. So if you tell me that your job is cash generation and we look at the P&L, I say we have a problem. It's bad data. If you tell me your goal is cash flow, we're going to look at the 13-week cash flow statement and we're going to manage the balance sheet, then I say alignment. But those could be the completely wrong measures for somebody who's trying to grow the trailing 12-month EBITDA for the sake of a sale that they have upcoming. So to me, what I really experience is not that any single metric is bad, but it's that misalignment between the desired outcome and then the measurement system is where real problems arise. And that's where I will press hard on people to ask why we are looking at this. Why is this the thing? The other thing I just hate is that I think people underappreciate how hard it is to actually get organizational alignment around numbers. So something as simple as like sales, there is actually no single formula for sales. There's gross sales and net sales and order revenue before taxes and all these different definitions that systems spit out. And so people will use words without meaning. And I hate that too. I prefer the objectivity of numbers with formulas. And so if you say sales, there better be a corresponding equation that everybody begins to understand so that we can unify a collective understanding. So those are probably my bigger issues, is not some single metric, but lack of alignment and lack of clarity.
Driving towards clarity, Taylor, I'm so grateful you said that. Spot on. It's the same thing, whether you're in a service business or a software business, of we will talk to brands and they'll say, but what's the incremental impact? And I go, what do you mean? Do you mean, did number go up? Do you mean actual incrementality? We'll do statistical testing. They're like, no.
Yeah.
Just like, how do I know this is better than what we would have done? And you're like, well, what are you willing to believe? And so actually getting to ground truth, let alone within a company where like you say sales, I say sales, we mean something different, is such a mess. All right. Last thing. Where can folks find you?
I love X. It's my favorite community. I'm very grateful to it. My DMs are open on there. I'm at Taylor Holiday. We're commonthreadco.com if you want to visit us on the website. And we have a podcast called the Ecommerce Playbook Podcast. If you enjoyed listening to me rant here, I do it twice a week on that channel.
It's an awesome podcast. Is there any
No, you're good, man.
any big thing? Sorry, I told you last question, but I lied. Is there anything that's like kind of popped up on there recently that you're like excited to explore more? Not saying where you have like high conviction, but you're like, actually, like there's some new idea here that I can't wait to like build
Yeah,
my
so
next
everything we're doing right
big
now is
bit of
around
content
this
or
evolution
kinda-
that we're sort of putting forward called the idea of the profit engineer. And it's this role, the evolution of what we see organizational design and sort of e-commerce being. It's a human operator at the center of an AI system and their capacity to help organizations. I have this whole series on X I just did called the 10% OpEx future, which is just where I see brands moving in terms of the leverage that they're creating in the way that the labor stack of businesses run. And so much, like everything is consumed by AI right now. I spend every waking second working in AI and thinking about how it's going to transform my organization and the companies that we serve. And I live for these moments. I'm a futurist. I find change to be just so invigorating and life-giving. So when things are status quo, I tend to withdraw. But when these moments of change happen, I get really engaged. So this is as fun as I've had in work in a really, really long time. And so I think that we're trying to put out as much content. And a lot of it's us learning. We're exploring just like everyone else and trying to figure out how this is all going to shake out. Thanks.
I love it. Your energy is palpable.
Yeah, likewise, Aaron.
Thank you. I really appreciate you taking the time today. This has been outstanding. All right, cheers. Hi, I'm Aaron Schwartz, co-founder and co-CEO of Orita.ai. We build AI customer segmentation for some of Klaviyo's biggest brands like Oriana, Spanx, Caraway, Third Love, True Classic, Rem Beauty, and on and on. Brands come to us to help find untapped revenue, improve their click rate, drive away mean bots, and a bunch more. You can learn more or get a free customer engagement audit at Orita.ai.